The main growth portfolio marches on, reaching $1 million on its own. Let's talk a bit about where I see the future from a macro perspective, as well as some of the changes that I've made to the portfolio. So on screen right now we can see a total value here of 9,407 Swedish krona. If we type that into a currency converter, we can see that it's above $1 million American dollars on its own right now. So very, very high volatility, very high risk, high potential reward. As I like to say, far out in the left lane in terms of volatility. And this can swing both ways. It can go up very, very quickly, but it can also go down quite quickly. So it's very important to understand the underlying asset when you're taking higher risk, because that makes it that much easier to hold through the downturns. The main stock in the portfolio, Porch Group, I've seen it go down by 50%, continue to hold, and now up, more than a 10x on this one. Alright, so total portfolio value, more than $1 million. Let's look at the holdings, and then I will talk a bit macro. The biggest holding is Porch Group. They really outperform. So we can see a return of 1,473% with the average purchase price of just above $1. And then Palantir coming in at second place in the portfolio. Still no changes there. And we can see Reddit on third place. They replaced Google. I sold those shares that I got vested from working at Google in the past and changed it for Reddit. A change that I'm very happy about. Even though Google won that case in America, the monopoly case, they did not have to sell Chrome, nothing like this. Stock was up 8% on that day. I sold after earnings when stock only jumped a little bit. Switched into Reddit, smaller company, larger potential for growth. Right now growing nicely domestically in the United States, but not a lot of focus on international, where they still have a lot of potential. And that move has paid off with roughly 92% return on that position. So almost doubling the cash that I put into Reddit. That just shows you the difference between smaller cap companies and mega caps like Google and Meta. And Meta's not a good example. They've had huge volatility. But Amazon, the likes, we've seen slower growth, and especially now with the announced dividend from Google, that shows that perhaps there's less growth opportunities. Still think they have the potential to just slightly overperform the market given the lackluster performance they had for 5 years. However, just shifting to greater, more volatile stocks with the business model that I understand, that I've been using, that was a move that paid off in this case. Second comment, Bauch Health companies still in the portfolio. This is one that was considered for being cut from the portfolio. However, gonna get into the macro now, the terrible jobs report that came out of the United States, very, very bad. It's just getting more and more likely that we're gonna see interest rate cuts, because the job market is not in a good place right now. Lots of layoffs, especially in the tech sector, and with the dual mandate of the Federal Reserve to keep prices from running loco, basically, keep prices stable, and the job situation, well, then this bad bad jobs report makes it more likely that we're going to see a rate cut. And for a company like Bauch Health, that's very much in depth, hugely in depth. Just look at the difference between the market cap and the enterprise value in the case of this company, and you can see what massive debt looks like. And servicing that debt is expensive. It's keeping a lid on stock performance. Massive risk baked in, of course, on this asset play. However, lower interest rates could make this more interesting again. Then again, I was doing some research and I saw that the Carl Icahn appointees at Bauch & Lomb resigned. They were out of the board now as a result of the controlling stake being too small now. So that's some bad news as well. Still have to do some thinking around this company. But that's the beauty of investing. You don't have to make rushed decisions. You can ponder, smoke a cigar, think about it, read some press releases, watch some earnings calls, go over the numbers, and then make your decision. It's never a rush. So that was some comments around the holdings and the macro. Lower interest rates, of course, very good for Porch as well. It's another bullish scenario if we get lower mortgages and people move around more, and we're going to use more of that home inspection software. That's going to be a boost to the very high margin side of the business. Of course, the insurance side is doing tremendously well as well, but very, very good side. Palantir is now down below a 10x for me. They were trading very high before, 180, 190, something like this, I think. And we've seen a correction, which is only natural. There's a lot of volatility in this company as well. It has a lot of attention on it. The underlying business is going strong, winning contracts, both in government and in the commercial side. I've made a few standalone videos surrounding that. What a extremely interesting company. Very controversial, but they are swimming in cash. I've never seen a company where the rule of 40 is looking so good. So basically adding together growth rate and margins, it's just insane. And that really explains the strong stock performance. A lot of haters will look at just price to earnings in this case. And that makes sense from a value investing perspective. However, it's also a trailing metric. We have to look at future price to earnings. And you can't just look at price to earnings and say, this grocery store has price to earnings of 12. How come Palantir has one close to 1,000? Something like this, Well, if you have almost 90% margin and you're growing fast, you can't be valued the same as a company who has a razor thin margin of maybe 3-4% on everything they sell and grow at 12% a year, 8% a year. If it were valued that way, it wouldn't make sense at all. It's just simple math. Profits in the future is being discounted to future value, and profit in the future for a company like Palantir is a lot larger than your average company. So a lot of execution risk baked into the stock. We have idiosyncratic risk. Management can make a big sidestep. That would be very bad. Start tweeting crazy stuff on Twitter. That's one of the risks that we have with a company like this. But I think it's extremely unlikely. They really have to take a wrong turn for that investment to turn bad. So that was some of the main holdings. That was some of the comments around the macro trend. They were gonna see lower interest rates very, very soon. The main portfolio, the growth portfolio on its own, bigger than $1 million American dollars now. The dividend portfolio, with a lot of property companies in it, I think we'll see a massive upswing from lower interest rates as well. I've talked about that for some time, that I think that a lot of commercial property is very heavily undervalued right now, especially offices. Nobody wants to touch that with a 5-foot pole, basically. Orion Properties is one such company who has a lot of real estate, offices. Could buy it at $1.61 in the past. It's closer to $3 now. Still very, very cheap compared to the assets on the balance sheet. This is a position I also have in the dividend portfolio. Roughly 5,000 shares in the dividend portfolio. It's one that I will continue to add to for a specific challenge. So there's plenty of opportunities, both of high risk, like Porch Group, very volatile. It's just above 2 billion in market cap right now, Palantir, and also more medium risk, like certain property companies here with very nice debt to equity ratio, in this case, very conservative. Cut dividend to pay down more debt. I agree. The cheapest capital that management is going to be able to find. A smart, prudent move which allows them to expand again in an environment with lower interest rate and pick up some nice deals potentially. And then of course increase dividend to create a nice yield on cost. Nicer for older investors, or the reason why I put it in the dividend portfolio, investors seeking more stability of income. Alright, I'm gonna cut the video short here as to not make it too long, but I hope you enjoyed this macroeconomic forecast and just a little talk around a few stocks, a few positions, where I see them going. Make sure to subscribe to see more separate analysis videos on individual stocks, especially small cap stocks. And make sure to join the Discord as well, where you can suggest stocks for me to take a look at. For example, right before recording this video of the main growth portfolio, I did a video on Critical Metals Corporation, a company suggested by you guys. And I have a few more of those to go through. Of course, the research takes some time, then it's gonna be edited and stuff like this before it comes out. But, you know, patience is a virtue, as they say. Alright, that's been it for this video. And as always, hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.